Let's have a look at today. This was a bit of a mixed day. It's rollover day. It's Monday. There's a lot of stuff going on. Volume is low. So I sized down. I was trading 2 micros, at least to begin with. You see my first trade over here. That was a long. Now, if I just flick on the handoff VWAP here, I'll put that in. Yeah, you can see that in purple. You see it held very nicely here. So I entered on that. That was a confluence with the opening range high. It was a bit off of the New York, but everything else of my confluences, the indices, NQ, YM, Max 7 was all green. So I considered this the healthy pullback, and I was confident enough to go in here. Now, what I then did is, as price popped, I actually scaled in a micro when I got confirmation that buyers were in charge, and it came back down again here. Got another pop where I scaled in again. So I was 2+1+1 micro in at the end, which made it about 180, $200 on a fairly small move, I would say. What I also did is I gently trailed my stop like this. So as I added in, I would do this. And as I added in again, I would do this, because the logic here is that we've actually already formed a higher low here. If that gets taken out with my scaled in position, which is larger, so you also have to remember my average price gets increasingly higher. My risk is actually maintained or kept at a minimum. So it's very aggressive risk management, which is something I would apply in these kinds of situations, especially on a day where, you have low volume and contract rollover and all that. I took a loss on another account over here. I was a little bit too eager to get in on the bounce of the New York. I should have waited for confirmation. They're actually having to see a higher low forming. It didn't, obviously, so I got stopped out. I actually scaled out of this loser as well. So that's something I'm also deploying, really, to minimize my losses by scaling out. So I had 2 micros on again. Halfway in drawdown, I take one off, and then full drawdown, I take the last one off. So that minimizes my loss as well. Now, if I took one off at half drawdown and it came back into profit, I would add that contract back in. It makes for a fairly easy break-even trade. And if then you get confirmation and it goes into profit, then you're set for that. So those 2 trades took me on an overall red day when I combined the trades across the accounts. So I was patiently waiting to see if there would be another setup, and it came over here when we saw all the indices break it back above the New York VWAP. Tested a little bit, also with the opening range high there. Get some kind of slope back on the New York VWAP going up, and we had confidence from the other VWAP sitting below as well. So I entered confidently. I was quite confident we could also take out this high here on, I think on NQ we already had. So there was some good confidence there. I pulled it early because as you can see, we sat a few minutes here just flat. And again, I didn't really trust price action too much today. So I pulled it there. Turned out to be a good choice. It could also have ripped higher. But that's the choice I made in terms of locking in that profit. So overall in the day, I'm plus $36 in profit from trading 2 micros at a time, scaling in and so on. But I actually managed on the first trade that I took there was on the XFA, which means I'm above 150 in profit on that one, which locks in my first plus 150 day after I took the payout last week. So now I have 4 more days of plus 150 to go to take another payout. So let's see how that pans out for the rest of the month.